Most people point to it as kind of the single guiding light to them in terms of the relationship of Bitcoin's price to these halving cycles. So talk us through a little bit about what the stock to flow model is and then what it's showing us so far.
Yeah, so the stock to flow ratio is a ratio from the commodities market, actually, that tells you something about an asset's scarcity. It divides the stock, the reserves of a certain asset by the flow, the newly issued Bitcoins or gold, newly mined gold. And if you divide the stock by the flow, you get the stock to flow ratio. So that ratio was known for ages in the commodities market. What I did was connect that with the market value of, Bitcoin in the beginning, but later also the other assets like silver and diamonds and gold and real estate. And what you find that there is a perfect linear relationship in the logarithmic space. So that was quite shocking. And with that, you can actually predict the price of Bitcoin very roughly, I should say, but you can do it. And because we know the stock to flow ratio of Bitcoin, it's pre-programmed, and that's a very nice thing. And it's of course very bullish at the moment. It predicts somewhere around $100,000 Bitcoin for the current halving cycle, which is 2020, 2024. So we're actually heading towards that.
Tell us more about the institutional interest, whatever you can share, whether it's organizations that you work at or have worked at, or just kind of conversations with former colleagues, peers, people you know in the industry. What's the general sense from the institutions in terms of Bitcoin, what they're allocating, how they're thinking about those allocations? Yeah,
so I'm Amsterdam-based. I talk a lot with European investors, some US investors, but it's mainly a European perspective that I have. Well, certainly the companies that I worked were not very interested in Bitcoin yet, mainly because of regulation and misinformation, if you will, because most of them thought it was for criminals, it was for and governments would ban it and all that, and of course for an institutional party like a bank or an insurance company, they have capital regimes with their central bank. So they'll have to put capital aside for every investment they make. If the investment is more risky, like Bitcoin, they have to park more capital for that investment. And for Bitcoin, it's almost 1-to-1. So if they would do $1 billion in Bitcoin, they would have to park $1 billion in equity as well. And that is of course not doable. It's more doable for hedge funds. So what I see is it's not the big institutions, pension funds, insurance companies, and banks that are investing on their own balance sheet or are interested in Bitcoin, but it is the hedge funds, the family offices very much so, and commodity investors, especially the gold and commodity investors are of course very much into the same philosophy that Bitcoiners have with sound money. Yeah, so family offices, commodity investors, and hedge funds. Those are the ones I see active, and the other ones will be late as usual.
And when you wake up in the morning, like, what do you check first? What's the data sources that you find most valuable, or in terms of just understanding what's happening in the market, whether it's the short-term or long-term period?
Well, to be honest, the price is one of the first things, the Bitcoin price, one of the first things I check, because that's the most accurate and timely information. If it's the same as when I went to bed, then nothing happened. If it has a big delta, then something happened. And then I go on Twitter, which I find is the most direct and accurate information source there is. Because one thing I learned is to not read mainstream media or watch mainstream television or even media sources like CNN and Bloomberg or the Wall Street Journal that are considered the creme de la creme in institutional investing. I've learned that with these new investments like Bitcoin, you better ditch those standard sources and go to Twitter and the experts in the field, because that's the most direct way of getting information.
Yeah. And when you think about portfolio construction for yourself or for the institutions, maybe both, is this still something that is like a very small allocation, or is it something that is being used to like denominate the whole portfolio? Or how do you just think about the portfolio construction and any sort of concentration targets?
I think for institutions, of course, that's very important to keep the risk profile sort of constant and within their mandate. So they'll have to sell Bitcoin as soon as it rises to keep the concentration low and within mandate boundaries. But with hedge funds or family offices or for my own investments, I don't have those mandates or boundaries. So I can what I see in practice, that what starts as a small investment, a couple percent investment in Bitcoin, soon grows to a double-digit position in Bitcoin, and after a few years, 4 or 5 years, it sort of dominates your portfolio. That sure is true with my own investments as well.
What do you think is the likely price for Bitcoin by the end of the year? And do you think that the bull market ends at the end of the year, or does it carry us into the beginning of 2022?
I would be very, very surprised if Bitcoin price would be below $100,000 at the end of the year. That would, sort of invalidate my view, my models, and that would certainly surprise me. I do think we will see a price that is at least $135,000 by Christmas, because that's what my floor model says. And basically, I'm using 3 kind of models that all say the same thing. So stock to flow, which has 100,000 on average for the entire cycle. Mind you, we're 1.5 years into that cycle and with below 100,000 prices. So we'll have to spend the next 2.5 years markedly above 100,000 to make that average. And the second model I use is the on-chain stuff. That on-chain stuff is really good at identifying bottoms and peaks. So we're now talking peaks, of course. So I know quite certain, not guaranteed, but I will have high confidence in that the on-chain indicators will signal a top. And if we look at the on-chain signals right now, I would say that top is at least a couple of months, say 6 months from here. So that would be end of Q1, maybe later. And then the third kind of models that I use, of course, that floor model, the 135,000. That's not based on stock to flow. It's based on other. It's a proprietary thing, but it's based on other stuff, technical and on chain. I guess we will be above 100,000, above 135,000 at the end of the year, and then we'll continue to grow, maybe towards the stock to flow X model targets, 288 or even above. I would not be surprised even to see in Q1 or Q2 next year prices of 300, 400, 500,000 dollars. But I do think. And I noticed you were talking before in this show that I'm full bull. I am right now, but I'm quite sure that there will be a time when I switch from bull to bear, like I did at the end of 2017. I'm a bit of struggling with that because I don't want to disclose it, because I want to at least disclose it responsibly and not be responsible for triggering the bear market. So people have ideas for that, I think they're very welcome.
And so when you think about that $288,000 price, I think a lot of people have heard you say that before. But when you say that it could go higher, $300,000, $400,000, $500,000, is that just pure kind of FOMO and a blow off top that drives that, or is there something else that you're looking at that shows that, hey, maybe we do go past that 288 that the stock to flow model has there?
No, that will indeed be a FOMO, and that will be very clearly marked in the on-chain analysis, which is looking for certain kinds of transactions that which I called them before, but those are FOMO transactions. So if the algos see the FOMO kind of transactions coming in, then the end is near. And yeah, so I would envision like, for example, going to 500K somewhere Q2 or something, and then crash back maybe 80% again to 100K, have a bit of a bear market, and then continue another cycle starting with the halving in 2024.
Going from 57,000 today to 500K in Q2, back down to 100K, and then continuing into the next halving. While it sounds crazy to a lot of people, would be pretty consistent with what we've seen in the past in terms of volatility, both up and down. So it's interesting to hear you say that.
Plan B, thanks for doing this. I know I'm a big fan of yours and your models and your analysis, so I know a lot of others are also. My question would be around kind of the correction that you just spoke of, right? Which is, we're at 58,000 now almost. You're saying that it's going to average at least 100,000 over this cycle, which is 2020 to 2024. So we obviously have to go much higher, whether it's 300,000, 400,000, 500,000. We'll see. But traditionally, there's also been an 80% correction. So is that something that you think will in fact happen again? And kind of how are you thinking about that in the long term?
I do think that's exactly what will happen again. I can be wrong, right? Let me be very clear. I can be wrong, but I do think that 4-year cycle that is sort of triggered by the halving is a very real thing. It has to do with the scarcity of Bitcoin. It has to do with the shortage that we're seeing right now. Bitcoins are traded on exchanges, and the exchanges have some inventory of Bitcoin, and you can buy it, you can sell it, but it's basically not on-chain transactions. It's Bitcoins that are on the exchange, and you buy them from other sellers, or you sell them to other buyers. But if you look on-chain, so the Bitcoins that are in cold storage, that large investors have, you can very clearly see these waves of shortage, and we're in one right now. At least last another couple of months before it's really well out of sellers, if you will. And what other news will trigger it, I don't know. I do think there will be a crash, and it could be as large as the crashes we've seen in the past. We have had 3 crashes of 80%. And I see no reason why we couldn't have another one, which of course is always short-lived and an excellent opportunity to buy more Bitcoin. But it could be quite scary for newcomers, which is precisely what, of course, those cycles do. They shake out people that are leveraged, that are investing with too much money, that are not certain of their investment strategy, that are those you need those really committed hodlers, if you will, and they'll rise again.
I want to talk about your stock to flow model real quick. So you have it projected at hitting about $1 million a coin by 2025. Do you believe this? Do you still believe it? And then if so, how do we get there?
Have at least one more cycle to go in the stock to flow prediction. So yes, that would bring Bitcoin in the $1 million to $5 million range. And I really do believe that we're getting there. And so that would be the path that we're seeing right now. We're going from 57 or right now to 63, 98 in November, and 35, for example, or something above that, right? In December, and then FOMO starts to kick in. We go to 200, 300, 400, whatever, and then crash. And from there, we wait till the next halving, and the next halving will be another important fundamental and even maybe structural event for Bitcoin, because I think that's what people misunderstand, that it's all about the supply and the doubling of the stock to flow ratio, which is an important part. But the other part is that miners will have to survive that event, because their income, their source of income, and their revenue stream will halve, and they'll have to switch to new equipment, find better ways to fund themselves, and be much more efficient in their business. And if the miners and the whole business survives another halving, that's a major accomplishment, and that will trigger the next rise from, say, 100,000 after the next crash to, 10x, 20, 30x that amount, which is in the millions, indeed.
It's pretty crazy, Plan B, when you start to look at this. When most people would hear, let's say 2025, $1 million to $5 million, that feels like it's a very wide aperture in terms of outcomes. Help people understand why it's so hard to pinpoint, $1 million to $2 million, let alone $1 to $5 million, right? I don't think people quite get kind of this idea of, even into Q1, Q2 of next year, if your kind of thesis plays out, you said, hey, 288's in the model, but 300, 400, 500, that's a pretty big variation as well. So help people understand like what drives that variability there.
Yeah, I think that's an important question, and it's funny to see that how naturally and logical that path of Bitcoin is to me, and how amazing it can be for newcomers and traditional investors. Indeed, the trick is to look at it exponentially, so in logarithmic scale, if you will, because it's not about the price level; it's about the growth level, the percentage growth that is constant or high, at least. If you look at my followers, which is 1 million now, which was unthinkable even a year ago, let alone 2 years ago. So 3 years ago, I started with I crossed the 1,000 followers boundary. A year later, I crossed the 10,000. And then a year later, so the second year, I crossed the 100,000, and now in the third year, I crossed 1 million. And so it's amazing growth, and people start to see it when you're big. But in fact, it's a constant growth of 20% per month. And yeah, that was 200,000 new followers last month, but it will probably be 220,000 new followers next month. And so that 20% is constant, and the same is with the Bitcoin price. Bitcoin goes 10x every 2 years, so 100x every 4-year period. That is amazing. To hear that, but if you actually experience that or look at the data, but that's different. But if you experience, and as I did, of course, buying at 400 or 500 and then going to 4,000 or 5,000, and now we're at 40, 50,000. That's 100x, and there are people that have 1,000x their investment or 10,000x, and that constant growth, I guess, is very specific to Bitcoin and triggered by the halving period, the scarcity that's intrinsic in Bitcoin, and that makes it such a perfect store of value, and more and more people will recognize this unique property.
What's the thing that when you look forward, you're most excited to? Is there a price milestone? Is there a number of entities on chain? Is there some sort of kind of external milestone? What's the thing that you're like, man, when this happens, that's going to be pretty cool. I'm really looking forward to it.
On the short term, I would be very nice if we hit that 63,000 mark end of this month, because I guess that's what really did it last time, nailing the 47 and 43,000 last 2 months. So 63 would be nice. Of course, the 100K. The 100K is sort of the make or break for the stock to flow model. So I really hope we hit that, and I'm quite certain. Or not uncertain, I should say, that we're going to hit that. The most amazing thing for most people, and also for myself, will be that on-chain model turning red, the FOMO transactions that will be detectable, and me as the full bull turning bear. And as I said, I'm struggling with that, how to communicate it. Maybe that's the best time to go dark. Yeah, I think there will be a time where we switch from bull to bear. And that, of course, is a great thing of a model, that it's not always bull, but that and you're not always a moon boy, but that you can predict the downsides as well. So yeah, I'm not looking forward to it. On the one hand, but I feel it's going to happen someday later next year, but I'm very much sort of looking forward to that moment.
Do you have any thoughts on a Bitcoin ETF and how that could either support, accelerate, or be detrimental to stock to flow model?
Yes, stock to flow ETF will make Bitcoin available for the masses, for pop and mom and investors. And yeah, it will be a huge thing for the market. Although we, of course, think, well, you can buy Bitcoin right now. Why should you pay the fees that are associated with these funds? But it makes it easy for the crowds. The herd will be coming then, and And that will be a big thing. So yeah, I think it's coming maybe this month, maybe next month, but it will be there. Gary Gensler from the SEC has already sort of nudged that it is possible to start a Bitcoin futures ETF right now, which I think has already been receiving applications for that at the moment. So yeah, I would be very, very surprised if that would not be introduced this year.
So let's talk about your models for the price of Bitcoin for the next, 6 months or so. I did see you say that the floor for November will be 98K, for December 135K. How are you getting there, and what drivers do you think will bring us to those prices?
Yeah, so I basically have three kind of models. The first model is the fundamental one, the stock to flow model that we talked about. The second one is a floor model that is more a technical analysis, price-based model, and it makes use of a mathematical error that most people, especially the technical analysts, make when looking at markets like Bitcoin, because Bitcoin is not normally distributed, the returns. It's following power laws, and you need different math for that. And all the technical analysis tools are for normal markets. For example, the RSI, the relative strength index, it normally bounces between 30 and 70. When it's 70, an asset is overbought. If it's below 30, it's oversold. Well, Bitcoin's RSI never goes below, or at least, well, sometimes, but almost never goes below 45, and can go as high as 95. So that tells you there's some really different dynamics and also mathematical processes behind the Bitcoin price. And you have to look at things like fractal dimensions, Hurst components, that kind of stuff. So that's the floor model. And the third thing I'm looking at, and actually I'm spending most of my time there at the moment, is on-chain models. So the big advantage of Bitcoin is that we have all the transactions, on-chain transactions, available in the blockchain. Everybody can download the blockchain. If they run a node, it's about 400 gigabytes of data. So it's a big data crunch, but you can get that data and analyze it. And you see all sorts of patterns in the transactions, where they came from old investors or new investors, big investors, small investors, all sorts of patterns. And those models are very useful for timing tops and bottoms. So FOMO transactions, for example, are very noticeable. At the very bottom, the emotions there are very interesting and seeable in the transaction. So I use those three models. And the model that got most attention the last couple of months was the floor model, because I predicted in June 20th. That was the same time, by the way, that the Guggenheim chief investment officer predicted Bitcoin to go below 20K. At about that same day, I made the prediction, no, it's going to 47. And Bitcoin was, mind you, was below 34 at that time. I said, well, in August, it will close above 47. In September, it goes down a little, but it will close above 43. And in October, it will close above 63. Well, it's a bit of luck, of course, involved in there. It has to be. One cannot be that precise, but at least all those targets were met. So 47, 43, and we're waiting for the close of the month, of course, now of October. But 63 is in the book. So and if that continues, and frankly, I would be very surprised if it doesn't. That would be a black swan event that we haven't seen in the last 10 years. But if that continues, we'll go to 98,000 in November already, and 135,000 Bitcoin in December. So that will be a very nice Christmas this year if that comes true.
Do you think that Bitcoin will not see that same kind of cycle again, in which the price sees a massive drop after this, next high is reached until the next halving? Yeah,
I seem to be one of the few that thinks we're in a normal cycle that will go down again after the all-time high, because everybody, I guess, hopes for the super cycle or the hyper Bitcoinization to start right now. and that we do not have a big crash after next all-time high, so that we don't see a minus 50% or even a minus 80% drop like we have seen last 3 times, right? And as much as I would hope that were true, that we don't see that crash anymore, I think we will. We're still in a phase where Bitcoin is very, very small compared to traditional assets. Institutional investors either flat out deny the asset, don't want to have it, think it's for criminals or bad for the environment and all this stuff you read in the mainstream media. They're still there. I don't think the world is ready yet for hyper-Bitcoinization or the super cycle. I don't think we will be managed by greed right now and fear later on, and see another minus 80% after we top out at a couple $100,000. But there will be a point in time, and in that way, it's a timing question. There will be a point in time later on, maybe after next halving in 2024, when the market is ready and ready for Bitcoin, but also ready to see that Bitcoin is the better money. Because it's scarcer than anything else. It's more divisible, it's more fungible, it's more portable, it's really mathematical and thermodynamically the best money there is. And as soon as people realize that, see that, then maybe the dollar is in trouble and we'll have a global reserve currency that's called Bitcoin. But I guess my timing for that hyper-Bitcoinization or super cycle event is after 2024, maybe somewhere between 2024 and 32.
Why do you think we've hit this new all-time high of nearly $67,000 for Bitcoin this week?
Yeah, I could give several answers to that, but yeah, maybe one step back. When I made the model, that was in March 2019, we were below $4,000 Bitcoin after the 2017 all-time high of 20,000. So we crashed all the way to 4,000, even going to 3,000. I think it was 3.2 at the bottom, and everybody's calling for $1,000 Bitcoin at that time. And through the stock to flow and through the scarcity, that guided me towards, well, there will be a halving. Bitcoin will be more scarce, approximately as scarce as gold. So we have to go up from here and not down. And we have to go up to the $1 trillion market cap. And we reached that cap at the moment. And so the last 2 years or 3 years were really spectacular and roughly led us towards that $1 trillion market cap. And I think, based on that stock to flow model and the scarcity of Bitcoin at the moment, that we should go a lot higher than we are today, towards the 5 or 10 trillion dollar cap at first, the same dollar market value as gold has. But yeah, more recently, there's of course all sorts of things happening in the macro and geopolitical sphere that caused that were the immediate triggers, I should say, for the rises. And of course, the Bitcoin ETF is one of the things that we have been waiting for a long time to happen, and that came to. That was a reality since this week, and that caused a major upwards movement, I think, in Bitcoin. That helped. From a pure investment point of view, I would say first that drops of minus 50% and minus 80% will happen again, just because the volatility is in the market. It's a part of Bitcoin. No other market has this volatility. There are, we had a minus 50% drop with the mining ban thing a couple months ago. That was, well, not a really big event, but still a structural event. But minus 50%, right? So I think things like fear and greed in investors and people will be here to stay. Humans will not be different, and they will freaking out again when maybe the US bans it. Well, I don't think that's not going to happen, but something will happen the introduction of the central bank digital currencies, the tightening news of know your customer and you can't exchange it to fiat anymore, whatever, some bug, some big entities selling because they don't believe in it anymore. I don't know what the trigger will be, but there will be panic and people will freak out. Liquidations will come and it will drop down. Yeah, I think that's part of the market. That's part of the charm as well of Bitcoin. So that will happen. That's the one thing. So greed and fear are here to stay. Minus 50%. We just had that. Minus 80% wouldn't surprise me. The second thing is, I reason from stores of value. So alternative investments. If I have a large sum of money, what are my alternatives? So it's equity, it's bond, and if you look at the commodity space or the non-financial asset space, it's gold, and it's real estate, basically diamonds maybe. But yeah, and so that's of course the stock to flow X model. I'm reasoning like an investor, like why would I put my money in real estate or why in gold or why in Bitcoin? And there are several aspects to what makes a store of value or money better than another one. And one is the visibility, another is portability, the classic fungibility, and scarcity. So I am not surprised at all that the real estate market is just so much bigger, larger than gold market. And I'm also not surprised that Bitcoin is a little smaller than the gold market. But as soon as Bitcoin, after the next halving or really this halving, we should get really close to gold market cap. And after next halving, it would really surprise me if an asset that is recognized by the market as a store of value that has, say, more than $1 trillion in value, if that store of value with bigger scarcity than gold would not at least be valued higher than gold. So somewhere between gold and real estate, 10 trillion and 100 trillion roughly. So in that sense, I think differently about the 4-year cycle. I think it's not, so the halving is important, not because of the miners selling, the sell pressure from because that's already neglectable. A big exchange is maybe bigger than some of the big miners, and add to that the ETFs and all the other sell pressure. So I think the selling pressure of the miner is not the thing. I think the fact that the scarcity is larger than gold is a fact, and investors notice that. They know it. Investors know that if gold can be made, if there's a new gold mine, of course that takes years to make it operational, but it can be found, a new source of gold, and then there will be a big supply. In fact, supply of gold has grown over the years, but with Bitcoin, for sure that that will never be more. So basically, this is it. There's 19 or 18.8 million Bitcoins, and that approaches the 20 and then the 21 million. But this is it. So yeah, it is from a scarcity point of view and alternative investments like gold and real estate, that I think that the halving still will be an impulse for investors, because they will recognize and see Bitcoin for what it is, a really scarce asset and valuable at that. Then to conclude, I do think if the stock to flow of Bitcoin will be bigger than even real estate, so above 100, and that basically is the case after next halving, but and certainly after the halving in 2028, but let's say 2024, when we go over real estate, then it will be the most portable, most divisible, most fungible, and also the most scarce asset on the planet. I think investors will see that, and that combination will probably mean that people are going to see Bitcoin not as a store of value, but as in money, and that will trigger the hyper Bitcoinization. So you could also say that Willie and I are saying the same thing. The hyper Bitcoinization will be there eventually, but I think that will happen after the next halving and after Bitcoin has at least a stock to flow of 100 and maybe 200, but much bigger than real estate.
I think I agree with that. I mean, like, I think that we're looking at pretty much a 4-year from now to really, you know, have Bitcoin as a main contender on the world scene as a new money, or definitely a large macro store of value. Yeah, and, you know, it's interesting because the next halving brings Bitcoin to the inflation rate below gold. It gets pretty scarce, and when I talk about the cycles, I think we agree on the destination where it's going. I think there's just different views on the shape of the chart. You know, whether or not we have the painful 1-year drawdown of 80%. And I think that's the difference of it is how, and you know, a lot of people have said, does it invalidate stock to flow? Well, of course it doesn't, because that's just based on the scarcity valuation, which doesn't change. It's just how does the price sort of meander in its shape, which is, you know, it's a very, you know, important point for people who want to time the market and want to sell the top, like, you know, Plan B did for 50%.
It's interesting, Woody. It means we're back at the risk measure point, right? It's how do we and the options in there. So will there be a minus 50 or minus 80% drop again? It's a risk thing, basically. So that the end point is, I think, clear. The trend is clear. It will go up, but how will we get there? And will there be minus 80% drawdowns? That's the
exactly.
The next 2 months are very well known. I think we will end in the roughly at 98 at least this month already, which is huge. Nobody believes it. And then 135 in December at least. But yeah, I'm not interested in the top at all. So I don't know when it is. Yeah, when we get there, I know it, but I don't know where it is. I'm not interested in that because I know it will be probably a 1 minute spike, right? I cannot trade it. I cannot sell or buy at that price level. I'm more interested in the general level where it hovers around, where it will. Yeah. So no, it's exactly like you say. So, but still, I think we'll go on in Q1. Because that's another thing you can measure from on chain. You can see the shortage that we're all talking about. How many Bitcoins are there? And you guys are really looking at coins at exchanges, and are they leaving exchanges to cold storage or coming at exchanges? But I'm looking at it at an on-chain level, and then you see that shortage building to a moment where it pops. We're still without telling what I'm looking at exactly, but we're still months away from that popping moment, and so I would say the top is at least 3 to 6 months, maybe longer away. I really don't think a crash is coming. I think we'll see a bull market that goes on for at least 6 months and bring us in the 100,000, 200,000. I wouldn't even be surprised with 500,000 Bitcoin in early 2022. But when we get to the sketchy part, when the FOMO transactions flow in, and you can detect those transactions, they are very distinct, then we have to all be a little bit more alert, right?
What milestones do you see as being the most impactful when we talk about the acceleration of hyper Bitcoinization?
Yeah, I think it's very similar. I mean, El Salvador is the first sovereign state to recognize it and even hold it in their treasury. And I think the next milestone is really to look at a wealthy, industrialized nation that holds it in their sovereign wealth. Because I think that's interesting, because then you got to sit at the table at the sovereign level who are going to bat for Bitcoin against like banning it or regulating it out. I think that's important. It'll add comfort to a lot of people coming in, and I think in terms of a metric, I think the next milestone really is the distribution. To have that distribution be less concentrated and start to reflect something akin to what we see within the fiat world, and then further distribute. I think that's one of the most important things. Everything within Bitcoin is very reliant on decentralization, and decentralization of the wealth base is just as important. Right. I think that would be a kind of non-visible political milestone. It's non-political milestone. It's just a metric where we just cross, and like now it's more spread than fiat. And then, hopefully it continues to spread and we have a better distribution of wealth in the world. That's my hope. Let's see how it works. Currently it's more just concentrated, but I'm seeing every year that the whales sail down. And eventually we'll have succession. The original rich whales will eventually pass on their inheritance to the next generation. And so, I think we'll get there. Plan B.
Yeah, predicting is difficult, but predicting far in the future is even more difficult. One thing I learned is that even 2 years into the future is so difficult. If you look back 2 years, right? If you look back at the end of 2019, I would have never predicted COVID or the whole thing around that. That's not even 2 years ago. So I think what will happen and what will be the big accelerator for Bitcoin and a lot more things with it is something we don't know yet. Something that will pop up next month, tomorrow, 6 months from now, that will alter the entire scene. It could be climate change. It could be a cyber security leak thingy scenario with attacks, and then all the banks, all the money is gone. And of course, Bitcoin is the only network that cannot be hacked and attacked. It's something we cannot even think of right now that will trigger that hyper Bitcoinization.
Do you think about tail risks?
Yeah, tail risks.
Like I think it's a tail risk that Bitcoin doesn't succeed. I think it's more like, it's already at a level of success where it's going to get to the next level. Yeah. But the tail risk is if something breaks and then the next day it's gone.
Yeah. The tail risk. Yeah, there is tail risk. But I agree with you. How I see it is Bitcoin is the better money. It's the better store of value. It's mathematically, thermodynamically, it's the best there is. So it must succeed. It has to succeed. It can be stalled. It can be sabotaged by political things, by military things, but it is physically or thermodynamically, it's mathematically, it's the best thing there is. So it would be like saying keep saying that the Earth is flat while it is round. One day you cannot hold that ball under the water. It has to pop up. So I fully agree. Bitcoin will go higher and higher, and there is still risk, but I think it's.
But we can't see it by definition, right?
Exactly. Yeah.
What's the saying that the biggest risks are the ones you don't know, right?
Yeah.
That's it. And that's the same is true for the biggest opportunities. So I think the next trigger, it will pop up. One day we'll wake up and then there it is. Changes the whole world.
Historically, what have been kind of the behaviors or investor behaviors on chain that have resembled a bear market and a bull market, and kind of break down how you guys view the anatomy of that whole process?
Yeah, to be honest, I view the on-chain, I think the on-chain analysis, for me at least, is most valuable in identifying tops and bottoms. So identifying FOMO transactions, if you will, at around the all-time high, and panic liquidation kind of reactions or transactions in a bear market, the bottom of a bear market. So, and you know it when you get there, right? So I could not say what the top of the market will be right now, because we're not in a FOMO situation. So at least I know we're not in a FOMO situation. So it is not the top, but I don't know when the top is, and that's that's of course the difference with the stock to flow, more fundamental model that has gold data and stuff in there. That you can very, very roughly say something about the level. You could expect the next Bitcoin price level to be, but on chain, so at least I can say we're not in a bear market right now, and we're not at the FOMO end of the bull market, so we must be somewhere in between.